So what does discrimination mean? Discrimination means that when you actually look at hiring somebody or when you employ them, that you treat them unfairly because of their race, their sexual origin, their sex, their nationality, or a number of different things that fall into this category. So it's called disparate treatment. So if you treat these people unfairly, then you can be allegedly accused as being illegally discriminating against people. Now there are two government entities that we can appeal to when we think this has happened to us, that your employees, if you are an employer, could appeal to, okay? The first entity for the state of California is called the Department of Labor Standards Enforcement, DLSE, which is a part of the state government. So you can file with DLSE if you feel that you've been discriminated against. At the federal level, you can file with the EEOC, or Equal Employment Opportunity Commission. They both do the same sort of things, but there's one at the state level, one at the federal level. So you can file with both of them concurrently if you want to. If you file with them, it will take at least 1.5 years before they even get to you for whatever your situation was. You may no longer be with that employer, or you may never have been employed by that employer, but before they actually get to resolving your allegation of unfair discrimination, it will be at least 1.5 years later, because that's how far behind they are. Okay, so what the DLSE and the EEOC do is conduct investigations. They're responsible for enforcement and penalties if you're found to have been unfairly discriminating against somebody. And they also may determine what kind of penalties that you're subject to. And again, in the case of discrimination, you can also have not only penalties fined against your employment entity, your company, but it can be also assessed against you as a person on a civil level. And I should remind you also that if you're ever alleged by an employee to discriminate against them, if you retaliate, you can also be sued for retaliation. Like if you say, well, you're fired. You can't say that to me. I'm not discriminating against you, and you fire them. Now you have committed a crime. It's called retaliation. You can go to jail for that. You can be fined. So lots of issues being an employer in the state of California. So another question was, what does the Labor Commissioner do? So the Labor Commissioner is the entity that administers and interprets the labor code, which is passed by what we call the Industrial Welfare Commission. And the Industrial Welfare Commission has created what we call the Labor Code in California, and that's this gigantic rule book which tells you what you can do and can't do as an employer with your employees. Very complex, and it's always being revised. Another question was, what is an independent contractor, and what does it mean to me? So frequently we see that employers like to hire people as independent contractors. What that means is when they pay them, they don't take taxes out of their check. They just pay them the entire sum of whatever it is they're billing them, whether it be an hourly rate, a weekly rate, a monthly rate, whatever you've agreed to pay them. Well, most of us are paid on what we call a W-2 basis, which is a normal employment basis, in which case all the taxes are taken out of our check. In the case of an independent, we also call them 1099, because that's a tax form you get at the end of the year. In the case of an independent, nothing is taken out of your check, and you are responsible for paying your own taxes yourself. Now, earlier I said one of the reasons why businesses fail is they fail to pay their taxes. So if you're a business, you have to deduct roughly for the first $100,000 that a person makes in a year, 7.5% from your employee's paycheck to go toward what we call Social Security. Not only that, you have the privilege as an employer of paying another 7.5% yourself. You match it. Okay, so that's a total of 15% that goes to the feds. 7.5% is yours as the employer. 7.5% came from the employee, from their paycheck. So for every dollar they make, 7.5 cents is going to Social Security. So later on you can retire with all that money that Karin told you you'd get, right? So it's important to understand that Social Security is an assessment, and you want to be able to say that you pay it if you're a regular employee, and you do because it is deducted from your check, but as an independent, you must pay what we call self-employment tax. That self-employment tax is equal to 15% of whatever you are paid by somebody that you have to pay to the government, and technically you have to pay it every quarter to the government, otherwise you are subject to fines and penalties after your first year of being what we call an independent. Okay, so this can also drive you into the poorhouse, if not jail, by failing to pay your taxes as an independent, okay? The problem with too many independents today is they truly do not qualify to be an independent. To be an independent, you must have multiple customers, you must use your own tools, you must operate with independence, and you can't have your time regulated. If your time is regulated by your employer or your client, then you're not an independent. So there's many rules that define what truly qualifies to be an independent and what is not. And basically, most people who are paid as independents, at least 80% of them, really do not qualify as independents. Now, the worst thing about it is this, and I want you to remember this if you ever choose to pay somebody as an independent. If they fail to pay their taxes, you as the employer are subject to paying them yourself. There's a very small, minuscule amount taken out of the first $7,000 or $20,000, depending upon what kind of employee we are, that goes toward funding the unemployment insurance account with the state of California. And ultimately, when an employee is laid off, if they are laid off, then they are basically technically eligible for unemployment based if they've worked at least the last previous year. And based on how much money you made, it will determine how much money you can get paid through your unemployment. And the maximum you can probably make in a week today is roughly in the $450 a week category. All right, that's the maximum you can get, but you have to have made a lot of money in order to get that. At least $80,000, I'm sure, to get that. All right. Now, as an employer, if you have laid people off, then your unemployment rate is going to go up, what you have to pay to the state of California. The more people you lay off, the more your rate goes up. So you want to try to keep employees, and hopefully if they don't file for unemployment, then your rate will stay very, very low and minuscule, not be a big cost of employment for your company. So there are many issues, other issues related to employment in California. I'll just briefly mention that, for example, in California, there's no requirement that a business provides sick leave, vacation, medical, dental plans. Benefits are purely optional by an employer. There's not a requirement for them. However, today in the state of California, there's a very large move by the government, by our state legislators, to make employers pay a significant percentage, or demand that they must pay a significant percentage of health plan costs and offer it to all their employees. So that's coming. Mandated health care by the state government is coming to us, whether we like it or not. And this is why it's so difficult to be an employer in the state of California.